Hi and welcome to another market update video, and today we're going to go through a number of things, and hopefully you guys will be up to speed with the BTC Elliott wave counts. The wave 5 timings I think is very important for a lot of you guys to see. We're going to look at the Maya multiple, the setup for altcoins, and we'll go to some of your questions also. So let's get straight into it. And if we look at the Bitcoin chart and we look at the Bitcoin wave count, you see this the same wave count I have of the wave 3 coming in at 73,000, and again in wave 4 we're currently I would say we're currently at the 382 at 54,600. Now it is possible, I'm not going to say it isn't, it is possible for to get to the 0.5. I don't think it's likely personally. I would say if you're asking me here, I would say that it's likely that the bottom is in, but sorry, you can't be too sure. The first thing I would want to see is Bitcoin get over that $60,000 dollar mark, and I'll show you why. Because what I also have is the fair value gaps, and these are very important. And what I do with the fair value gaps is that I look at the monthly chart first, and fair value is where price has extended and there hasn't been any wicks in the candle before and after. So if you look at this last February candle, you can see the wick was here at 49,000, and the wick to the upside on the month after was around 59,250. So that created an imbalance in this zone, and what you've seen is now Bitcoin has come right into the middle of this fair value gap, which is good, which is it gets the liquidity from here, and I want to see a close above it around 59,250, but let's just say 60,000, and then I would be a bit more confident that the bottom is in for this local bottom. Anyway, fair value gaps don't really have to close. They don't have to, each one doesn't have to be retraced into. We can see a number of fair value gaps that this one, if you look at this one in the last bull cycle, it didn't actually come until the next bear market until we close into that one. And the famous fair value gap where everybody was saying 12,000, it never got hit. So they don't have to be hit, all of them, especially the higher time frame ones. I normally like to look at the monthly and then the weekly ones also. And then if you look at the weekly one, we've come into the one that was again in February, which is a monthly and a weekly fair value gap. You got some coming down at lower areas. We've printed some bearish fair value gaps here, so this is where the resistance will be at 64,000 will be a key resistance, and then again around 67,000. So these are the resistance areas if you're looking for short-term trading, swing trading opportunities. You're probably going to get a rejection from here and there. That's likely. But regardless, let's go back to the Elliott wave count, and I just want to show you why I think this is a potential top region. So I'm going to take off this parallel channel for a second, and I'll draw it again because some of you are asking me how to draw that parallel channel. So what I do, I get the wave 1 to the wave 3. So we know these two waves have ended. That's quite apparent. Wave 1 has ended because obviously wave 2 was back in 2023, and wave 3 has ended because of the correction that we're having now. And we'll go to the bottom of wave 2. Okay, so the bottom of wave 2 on the Bybit chart was around here, and then we should get the wave 4 low. That's how I make this chart anyway. And what you'll find going forward is that wave 5 will not break this channel. It just that's one of the techniques of how to find the wave 5 target, and that's what I've done here. And the wave 5 target that seems the most logical to me. Okay, there's one at obviously 105,000, but this one is screaming out to me is 123,000 or 124,000. Why? Is because there's a number of reasons why actually. The first one is that obviously we have the one-to-one extension here for the wave 5. Okay, even though I will say that the 618 is probably the better target for wave 5 here, the 618, but the one-to-one is there if there are extensions in this wave 1. It's 123,000 or 124,000, and also you got the channel upper channel limit here, and on top of that you've got these key time pivots here on the 0.5 and the 618, and that's what I'm going to talk about in a second, about these time pivots. You know, this is where I think, you know, and this all comes in, you know, around you know, these two areas. So 105 to 124 is a key level that I'm watching. Not, you know, and if it does extend crazy amount, you know, the 155,000, but because it's that level is out of the channel on these time pivots here, the only way you get there is if if this extends, if this market extends a bit, and you get the let's put the 786 in, let's put the 1-to-1, the 1618 time pivots, yeah, and then you see then it goes up you know, in the channel. So if this market extends to 2025, April 2025, then you got 208,000. If it extends to December, you got you know, 154,000. But personally, I don't want to confuse you guys, personally I'm just looking at I'm looking at the 618 time pivot and the 0.5, and the two levels I'm looking for a wave 5 ending. So how I'm looking at the wave 5 to end here, okay, there are many ways to look at how the wave 5 ends, but I like the channel where you, like I showed you, you plot 1 and wave 3, come down to wave 2, you should get the wave 4 bottom, which comes in at the 382. You know, the 382 is a perfect retracement for a wave 4, okay. And then the wave 5, what I have here is at the top of the channel, coinciding with, you know, the 618 of the wave 3, or the 1-to-1 of the wave 3, okay. So these are the two key pivots for or fib targets for wave 5, which is the 618 of wave 3 or the 1-to-1 of wave 3. The 1618 is possible, but you know, that's another extension of, you know, that's very extended. But 618 is what I'm looking at to the 1-to-1, so 104,000, 105,000 to 124, 25,000. These are levels that I'm watching at the moment. So you know, that's one way to get it. And another way to get the wave 5 target, so if I take that all off, so wave 5 also can be the, you know, the length of wave 1. So whatever the length of wave 1 is, that should be the length of wave 5. So we can just, you know, look at it here as well to get a trend fib extension. We'll measure wave 1, which was about here. We'll take it to wave 4, and the 1-to-1 again is around 106,000. So you know, that 1-to-1 extension of the, so that level there is the same as it was from like 15,000 to 30,000. So you know, you probably, and you know, 106 again, 106,000. See, that area is very, it's coming in very everywhere is coming in. You know, that level of 104, 106,000, you know, that's a double confluence there. I know you got the channel confluence there, but it doesn't, you know, let's put the time in as well. You got 2 time pivots here of September, you know, through to October. You know, this level here, 106,000, it's going to be a resistance, 104,000. Could it push to 124,000? You know, you got to see when the time comes, but these are the levels I'll be watching for that wave 5. You know, that wave 5 extension, and currently wave 4 I think is ending. A lot of confluence here at the bottom. The FVG targets I've, you know, gone through again just now. Yeah, so you know, that's something that I'm looking at for Bitcoin in the next few months. And what I'm going to show you now is how I got those wave 5 timings. Yeah, so what I want to show you now is the timings, wave 5 timings in relation to wave 3, and how I got one of the ways why I'm thinking September, October is a time for us to, you know, be vigilant in case, you know, there is a top coming in. I know there's a lot of talk whether it's going to be 2024 or 2025. I mean, regardless, you know, I still think it's going to be 2024. before November. That's a key date for me. If it's after that, then again it's gonna be a normal cycle, higher prices, and great for the market. But we need to stay vigilant and see where things are going. So what I'm doing here is I'm measuring wave 4s, wave 5s in comparison to wave 3. So I'll show you how I did this how I'm looking at this, and you can see, you can obviously plot along in your own charts. So I look at the bottom of wave 2, a major wave 2, and there's the wave 3 for 2017. Okay, then I'll go to the bottom of wave 4. Now how long was this wave 5? So this wave 5 ended around the 0.5 of the wave 3, so it took half the time. So wave 3 was half the time longer, or wave 5 was half the time shorter than wave 3, and it ended around December. So if I go back to even this small wave 1 back in 2019, and we can measure the 2, which started around there, the 3 was there, and the 4. Okay, that's the 5. Okay, it wasn't, wave 5 was, if you go back to the fibs, it was 2.36, so the 0.236, that's where wave 5 was in relation to wave 3. So it was a very short wave 5. It ended 0.236 of the time of wave 3, so that was a very short wave 5. Okay, so that's another date. So if I go back to the 2021 bull market, and we look at the wave 3 again, so that's the wave 3 in comparison to the wave 4. I've got too many here. Again, when did this end? Around the 618. So wave 5 took around 61% of the time of wave 3. So it was 61%. So it's around 40% shorter than wave 3 in time. So it wasn't as long as wave 3. So in all of the wave 5s, what I'm getting is that wave 5 is shorter. It's shorter than wave 3 anyway, in terms of time and price on all of them. Not to say that this wave 5 cannot be extended. It can be extended, but let's look at the time. So let's look at the time again. So if we measure it again, so we know that was the wave 2 around here. Okay, wave 2 was there. I know on Bybit it's there, but let's just say on most of the exchanges, wave 2 started, or wave 3 started here. The top was around 7, in March. Okay, and let's say this is the low. We don't know it, it's not confirmed low at the moment, but let's say it is at the, it's a confirmed low. And let's get the common extensions, which are the 618 and the 0.5, and again they come in at the end of September, and the 618 comes in at the end of October. So again, if it's going to follow the previous patterns, and wave 5 is going to be again 0.5 in time, or 618 in time, then we're going to expect it to finish around September, October. Now let's just give other examples. It's not happened so far, but let's just say wave 3 is the same length in time. Wave 5 is the same length in time as wave 3. Then that will take us to December. Okay, I don't know if it's going to happen. It's never happened before. Let's say it's over 1.5 times in length, and that can happen. That's less common, but it can happen. It's happened in other markets. That would take you to April, the end of April in 2025. And if that would happen, obviously that's going to take you to a lot higher prices, probably prices around $200,000 if that happens. But me personally, like I'm saying, I'm looking at the history of Bitcoin, and Bitcoin wave 5s tend to top in this time frame. Okay, unless this count is wrong. Okay, unless this is not wave 3, we're still in the wave 3, and there's other counts people can lean towards, but this is what I'm leaning towards, is that's the wave 3, this is the wave 4. And if the wave 4 hasn't ended yet, and let's say the wave 4 will end in a couple of weeks time, then obviously these will just get pushed out a bit more, and that will be the end of October, that will be the end of November. But for me, that would invalidate the left translated cycle if it goes into November. So for me at the moment, the left translated cycle is still there, and we can have that top, like I said, around this 104 to 106,000. or to the 124-25,000 range, and these are the ways that I have found how wave 5 can come about. But yeah, that's my analysis on the wave 5 timings. What I want to quickly show you now, okay, is something that I'm not sure if I've mentioned in a video before. I've definitely tweeted this out, is the difference between the NDXT, which is the Nasdaq technology sector, and Bitcoin. And just generally, I'm going to do it very quickly, so I'm not going to spend too much time on this. You guys can look at this in detail if you want, and we'll see how the Nasdaq generally leads Bitcoin. And I'll show you what I mean if I can quickly look at it like this. So we got Bitcoin in blue, and we got the Nasdaq in orange, right? And what you'll find in either of them, okay? So let's look at just quickly. I'll just plot vertical lines where things bottom. So the Nasdaq bottomed here in September 2022. Bitcoin then bottomed in December 2022. Okay, that was something that we saw quite clearly. So Bitcoin bottomed here. There's a few months later. Okay, and then the next significant. Then you had obviously you had bottoms here. Nasdaq bottomed a bit early here. Bitcoin again. So we can just plot that. So that probably the wave 2 of Bitcoin bottomed in October, but the Nasdaq obviously bottomed in August. So again, a few months earlier than anticipated. And obviously the other key thing was when the Nasdaq broke its all-time high. The technology sector broke its all-time high, and that was around, so if let's just say that was around here, which was December. So in December 2023, Nasdaq made new all-time highs. Okay, Bitcoin did not do that until we can say February 2024. So again, a couple of months later, it broke its all-time highs. Now again, the Nasdaq made its low in April. Has Bitcoin now made its low again in July? A few months later again, Nasdaq has broken its all-time highs in, you can say, when was it? When did it break its all-time high? In May. So I know there's a lot of lines and it might be confusing. So May. So that was what, 2 months ago. So if we go by that scenario, we should be, or Bitcoin should be breaking its all-time high around July, which is now, or August, a few months down the road. And I think that will happen. I think the way the Nasdaq is going, the technology sector is always leading Bitcoin. You have to understand that Bitcoin, for me, is a tech stock in itself. It's not just what do they call it? Bitcoin, like gold and on that kind of safe haven. It actually behaves more like a technology stock. So what I'm trying to say is that look out for now the comparisons, like we've just said. Nasdaq breaking its all-time high here again in June or July, whenever it was, and Bitcoin now is to follow. I would say in the next month or two it'd follow and probably set its all-time high, and maybe that will be the end of the cycle. But obviously that we have to see, remains to be seen. But again, there's similarities between Bitcoin and the Nasdaq is plain to see. Okay, the next thing I want to share with you is this chart here, which is, I know some of you call it the rainbow chart, some of you call it I don't know what you call it, whatever kind of chart, but it's a Mayer multiple, and all it does is it shows you, if I double click on it, you can see it's called the MMBS. Okay, you can probably get it on here, MMBS, is it here? Mayer multiple bands, right? These ones. And then what you can do is obviously add them on, and the way I've customized it, I haven't put in the 3 standard deviations above, because I don't think that's realistic anymore. And what you do need is you need coins with decent history. Okay, and I'll just show you how it works. And this is not for exact entries and that sort of stuff. This is more an investor tool. Always use it on the daily time frame. It doesn't work so well on the weekly, in my opinion. I've looked at it. It doesn't work too well on the weekly, even though Bitcoin's top is coming at 135,000 there. But I use it on the daily personally. And if we go into one example for FET, okay, so FET, and we can just look at this cycle, right? In a bear market, let me tell you, it doesn't work great. In a bear market, it's obviously making new lows because the Mayer multiple relies on the 200-day moving average, so you have to be careful on that. But once you have the change in trend, which we are in now, I would say it's quite safe to use. And you would see that in the green areas and the blue areas is the time to DCA in, and the orange and the red areas is time to like basically de-risk. So if we look at this cycle and we look at from November 2022, it would have, for FET here, and I'll go through a few altcoins. February would have told you to de-risk around 58 cents. You could have got back in at 18 cents, 17 cents. Again, you could have de-risked even here at 75, or you could have de-risked at $2.80, $3, and now again it's telling you to go back in. So this is, for now it's telling you, so if you sold here around $3, and now you're almost let's look at how much we're down in terms of the price. So just take it from rough estimation, you're about 70% down, or 68% down, right? So now you can start DCing back in. Let's look at another one. Let's look at Injective. Same sort of situation. Okay, let's just go back again, from this cycle. So December 2022, it's in the blue. You could have bought, de-risked here at $9, back in the blue, at $6, de-risked again here at $45, and now from this red zone to where we are now, again we are about 63% down, which is about $17. It's telling you to buy where we are now basically. Okay, so that obviously if it starts breaking below this band here, then it's kind of bad, because then you don't want to start ending up in bear market territory. We look at another one. Let's look at what we got here. Let's look at Track. Again, Track, same sort of situation. Right now we're coming into the green zone. It was the de-risk zone was $1.50. So again we're coming down into this zone. I can go to another one, C-Pool. Let's see where that is, coming into the green zone. So this is quite good. It just basically tells you when the market's overheated and when you can DCA in. And this is something that if you're not really good at Fibonacci, Elliott waves and all that sort of stuff, it's a very easy tool just to use. And it's not perfect, nothing's perfect. You will get no tool that is perfect, just the fact of life, but it will help you looking at the DCA zones and the overheated zones in that sense. And so I would say this is it's really good to set up. And on top of that, what I would use, another one, it's based on the Mayer multiple also, which is the MMO. Okay, this one here, and again what this shows you, this indicator shows you, so it's a similar thing. I like when I look at these sort of indicators, the Mayer multiple, it shows you basically undervalued, optimal buy, optimal sell, and that sort of stuff here. So if we go back to another one, if we go back to FET, you can see overvalued, not the weekly, only on the daily. Remember, daily is very important, not weekly. So it was overvalued when it was going into the price range here, and now we're looking at it basically undervalued again. And what does the green mean? Let's see what the green means. I don't even know what the green means, but it's undervalued right now. So it's going into, if you go back, you can see when it's undervalued, and then you go overvalued, and you can look at this with the other chart as well, with the bands. You can look at both of them, and you can see when things are starting to get undervalued, and especially when things are heating up in the market. Let's look at another one, Injective. I'm sure this will have the similar patterns. Obviously this is not exact to the dollar bottoms, and these are ranges, so you have to so say you bought here when it was undervalued, you bought at $23 and now it's at $20. Yeah, it's a bit of a loss at the moment. You can go back, you can go here and look at Injective. Yeah, it can still go down. These are zones, so don't expect these to be I bought it and why isn't it gone up. No, these are zones. If you're not into, like I said, Elliott wave, Fibonacci trading, FVGs and all that sort of stuff, where you want exact prices, or you're looking at exact ranges, or not ranges but exact price levels, then this is more for the casual investor, where they can invest in something, leave it for a few months and say, you know what, because realistically the signals are not that in these things, the signals are not that they're not often. So look, if you, for example, if you bought back in September, you're not selling until December, for example. Yeah, let's go back again. This is for injective. If you're buying here all the way in June 2022, you're not really selling until April 2023. So it's a very long time. These are very long time signals. You know, this is IOS, as a coin that I'm in as well. So you know, if you're even if you're investing anywhere down here, yeah. So that was probably the bear market, when you're coming into the bear market, okay. And then you're selling, or you're selling some here now. Only now you're getting back in. So these are very long, as I can say, long-term investor tools. These are not short-term tools at all. Okay, so let's go back into what Bitcoin looks like. It's really pumping at the moment, but regardless of that, let's look at the chart that I always look at. I know I've done a lot of altcoin charts lately and all that sort of stuff, but this is still the main chart for me. Still in the wave 2, okay. Wave 3 for me, you know, until we're, let's go to the 382. Let's go to the 382. Put it in green, okay. That's when, you know, you can confidently say wave 3 has started, and you're gonna get a mad pump, you know, a mad pump for alts. So we're still in wave 2. Perfect time to accumulate for me. Remember, it's not financial advice, it's just my opinion. Wave 1, wave 2, 3, 4, 5, end, finished, go home. That's how we do it. All right, same here. 1, 2, 3, 4, 5. You can even go back again. 1, 2, 3, 4, 5. It's all the same sort of thing. So for me, nothing's invalidated until, obviously, if we break 3.045 million, yeah, then we're done for, and we have to reevaluate this whole chart. But right now, things are looking as they were when I made this, you know, when I did this update a week ago, and even a few months ago. Still looking for, you know, accumulating alts at this stage here. You know, a lot of alts probably in their wave 2s, and then looking for that wave 3. That's what we're doing at the moment for the alt chart. Yeah. So let's go to some questions, and we'll go to a few of them. The first one from Jay Patel says, is there always a B wave in BTC for alts to have the second uptrend? It's easy to see for 2021 but not for 2017. It is, you can see it even in 2017 if I can go to the chart. But with 2017, the difference is, okay, it's in, so that's the wave 5, okay. So it's in the B wave of the A wave, okay. So you got the 2017 top, you know, A, B, C, and that's the big A wave, and then you got the B, and then you got the final C there. So it is there, but what you technically have is you have the move coming down and then the move going up. For me, how I will judge it more, rather than just looking at this, I'm going to look at basically the 3, the 4 and the 5. Okay, now if I show you here what I mean, okay, so that was June 2017, okay, 4, and then the 5, it was on the 22nd of January 2018, okay. And if you look here, yeah, so let's go back. So the B wave here, Monday 8th of Jan 2018, you know, all this area here, we go back to the Bitcoin chart, A, B, you know, around the same sort of area. So that's how you would that's how you'd find it. It is there, but the way I would find it personally, I would just wait until the 3, 4, 5, you know, on the others on BTC chart. It's probably easier to see it here than on the BTC chart, but that's how I would do it. Another question I say, it says some traders say that the BTC top was already in March. What do you think? I don't think so personally. I just don't see enough evidence that the top has happened. I could be wrong, but that's the way I see it. I don't see the topping yet. Your view on banana? No idea. A bit tasty. Are we bottomed or possible to go lower? Like I gave you in my BTC update, at the moment the 382 is an ideal bottom, and I think personally I would lean towards the bottom being in. Until 60,000 is broken, then I start to feel a bit more comfortable, but that's what I see at the moment. Pendle, could you analyze Pendle? Maybe I'll do it later. Again, another question. It appears that 2017's alts reached their peak during the sub-wave of B of the major corrective wave A, unlike in 2021. Like I said before with Jay Patel's question, I'm going to be looking at this chart to guide me when the fifth wave is in, the alts BTC chart, and I'll also be looking at the main BTC chart. Yeah, you're right, Miguel. It could happen in the sub-wave B or the actual B wave, but it's a B wave regardless. Sorry, that's my point. Why do you think BTC will only go to 100k? Like I said, if you looked at my wave 5 analysis, that's why I think BTC will go. If we get left translated cycle, do you expect a multi-year bear market? Yes, I do. I expect 2026 to be the bottom, around 30k, 40k. Other questions? Any more other questions? Would you be looking to short the market once BTC? No, I don't short the market. I don't short. It's just one of them things, right? But I still think there'll be a bear market. So I hope you enjoy that video. Any other questions, let me know. We just have to be, just remain patient. Remember, none of this is financial advice. Just hope you enjoyed it. Hope you learned something. Please give it a like, subscribe, share it with your friends, and I'll see you next time.